they're going to lose control of the bond market, blow up the banking system, blow up the stock market. It doesn't feel right. It doesn't feel right. And with low inflation, relatively low inflation. Why would they do it? So that's what's incongruous for me. So you have to say, oh, that correlation that has been in place since Bitcoin's existence at 90% correlation and 97.5% with the NASDAQ is false.
We are on the verge of an infinite bid on Bitcoin. If you look at the macro landscape, everything is set up to facilitate this infinite bid. Just Bitcoiners accumulating, regardless of the market sentiment and quantum FUD or whatnot. People are just buying constantly. And then you have fiat collapse. And a lot of people don't understand how easy it is for fiat to collapse, but you just look in recent weeks of the Iranian currency, the rial, and it just went like up and to the right, went to zero. It depends on which direction you're looking at it in, but fiat collapse is infinite bid.
The crypto market stands at a rare turning point that could define the entire year. Key conditions, often overlooked, have aligned, yet most people are distracted by the noise about Bitcoin crashes and 4-year cycles. The real story is what's happening beneath the surface, not whether crypto rises or falls in 2026. The real question, do people grasp the powerful forces set to move these markets like never before? Everyone keeps asking if Bitcoin will follow its traditional 4-year cycle and enter a bear market this year. Others are waiting for clarity on regulations or hoping the next rally starts soon. But while that debate continues, something much more important is building. Global liquidity is starting to shift, and that changes everything. When liquidity flows, Bitcoin moves. When it dries up, Bitcoin stalls. Right now, all signs point to liquidity returning, which means the conditions for a real rally are forming, whether people believe it or not. Now, Raoul Pal is making one of the boldest calls for 2026, and it goes against what most people expect. He says the idea that 2026 will be a bear market year doesn't make sense given global liquidity. For that to be true, liquidity would have to be falling, but there is no evidence of that. His reasoning cuts through the confusion and focuses on what actually drives Bitcoin and the broader crypto markets in the months ahead. Let's hear directly from Raoul Pal for more insights. Please like, subscribe, and enable notifications. Thanks for tuning in. Enjoy the rest of the video.
There is no evidence of that. If that were to be true, then we then kind of nuke the economy, because you would be reducing global liquidity when the ISM is at 47, which is manufacturing is basically at a recession.
Yeah,
it doesn't happen that way. It's not going to happen in a year of a midterms of a very aggressively pro-economic or pro-business leadership. It just doesn't make sense. So for that to be true, and we've got to roll all the debt, that means they're going to lose control of the bond market, blow up the banking system, blow up the stock market. It doesn't feel right. It doesn't feel right. And with low inflation, relatively low inflation. Why would they do it? So that's what's incongruous for me. So you have to say, oh, that correlation that has been in place since Bitcoin's existence at 90% correlation and 97.5% with the NASDAQ is false. His game plan is he got voted in. He was funded and voted in by the crypto lobby and the tech lobby.
Mm-hmm.
So his job is to continue to give them what they want. So he's clearing the regulation, putting the path down, making it very clear that they're pro-crypto. But then the crypto people are like, well, why has my number not gone up? Okay, so let's think this thing through again. If liquidity is not flowing, where's that money going to come from? The institutions. But we haven't had the Clarity Act. So why would most of them do it? We get some. We saw ETF flows into Bitcoin and stuff like that. Great. But we haven't had the floodgates yet because it's not been cleared. So and then we say, yeah, but the banks, they're all building on it. What have they actually launched? Nothing yet. They're just all starting to ramp up because the Stablecoin Act came through, so they can start with that. Then the Clarity Act needs to come through. So we've got no liquidity and only the financial system kind of revving its engines to get going, but they're waiting for the checkered flag to be raised so they can start the race. And so, but everyone's like, well, I thought Trump was going to pump my bags. He's doing everything. He's telling you that they're going to roll the debt, they're going to use the liquidity through the banking system, they're going to give you fiscal stimulus, they're going to force rates lower, they're going to change the Fed chairman, they're going to do everything they can to pump your bags whilst giving you a regulatory green light. So it's a patience problem again. I'm like, it's always going to be the financial system that builds on ETH. Yes, they will use Solana, yes, they'll use Swede, yes. But ETH is the Microsoft operating system in crypto that the financial system will use. There's the broadest density of talent. It has been battle tested longer than any other smart contract platform. And it's got the scalable layer 2s. It gives them the ability to spin up their own chains and do all the things that they want to experiment with. Yeah, I mean, it was blindingly obvious that this was going to happen. Each different person have their own needs and objectives. Different people have different risk tolerances. I mean, I didn't reduce anything last cycle. I just bought more into 2022. And people can't wear a drawdown. I'm used to it. I've done 2 or 3 of them in crypto. It's fine. Just buy it. Do I want to take some money off the table because I need to buy some stuff? Yes, but that's not my signal of like, it's the end of the cycle. I just don't do it like that. But everybody else has a different risk tolerance and they have different needs. And they don't like the drawdowns and they don't have the money to add to it. And this is where it becomes really hard because everyone expects me to be the font of knowledge when it comes to this. And I don't know. I'll take some money off because I think my money's gone up enough that I can go and buy something that I want to buy with it, like a house or whatever it is, right? Mm-hmm. It's like, but that's it. It's like, where else do you put your money? Okay, you step out of the money for a year, market for a year, and you avoid the down cycle. But I've also that up as well in the past. It's not easy to do. So I don't know, but I mean, certainly, within the asset management business that I run, we'll use the macro overlay to reduce risk significantly. So we switch out of being in long-only hedge funds into market-neutral hedge funds to dampen the volatility of the portfolio, but still while getting returns. So, will I do that with all of my money? Don't know, but, some kind of idea along those lines. I've got 3 or 4 businesses.
Yeah, me too.
And so they create cash flows. So then you're not living off your investments. Your investments, what you should then be thinking is, how can I jam as much money into my investment? I don't see Warren Buffett trading out with the cycle or Jeff Bezos hedging his shares every 4 years. No, you just let it compound. And if you can buy more, you buy more. That's how you should do it. But people can't do it. Minimize regret. Only you are in control of that. What is your level of regret if your asset pool gets halved tomorrow? Right? How much regret will you feel? So once you start to get where you start checking your P&L and start thinking, you start looking for houses or cars or watches, whatever it is, that's the point generally you should take some off. And take some off over time. I mean, I remember in 2017, I bought Bitcoin at 200. I sold out at 2,000, thought I was a hero. It went to 20,000 7 months later. And I then bought it back near the bottom of, I didn't buy it at the bottom, I bought it in the COVID crash. Mm-hmm. But the bottom was like 3,500. So it's still above where I sold out. But I bought it at between 6.5 and 10. I figured out if I just left my money in the market, it would have been better. Or, even better, is if I just added to my bet every time there was a down market. You just compound returns so much faster because you have more money in the market when it goes up.
Pal argues that Bitcoin's 90% price correlation with global liquidity makes a 2026 bear market unlikely, as governments must roll trillions in debt without crashing liquidity to avoid destabilizing bonds, banks, and stocks, especially during midterm elections. He also emphasizes Ethereum's institutional momentum. Stablecoin supply doubled last year, and banks are building products in anticipation of the Clarity Act's passage. Once approved, institutional capital will flood crypto. Pal calls Ethereum the Microsoft operating system for finance, noting that the use case debate is settled, as financial institutions are already developing on its platform. Meanwhile, Samson Mow is warning that an infinite bid is coming. He breaks down what he calls the infinite bid for Bitcoin. He lists 7 or 8 separate forces all pushing in the same direction. Strategy and similar vehicles are set up to buy Bitcoin forever. Nation-states are accumulating, and more are coming. Bitcoin bonds at the sovereign level are in discussions with multiple countries. Retail investors are stacking regardless of market conditions. Fiat currencies are collapsing, and people holding them will pay any price to escape. ETFs have removed the barriers that once slowed retail adoption during past bull runs. Mow says that even if only one of these forces plays out, it will be enough to drive Bitcoin higher, but all of them are happening at once.
We are on the verge of an infinite bid on Bitcoin. If you look at the macro landscape, everything is set up to facilitate this infinite bid. Overall, we are on the verge of all these things coming to fruition. And even if none of them happen and just one of them happens, that's enough. But we have, 7, 8, 9 different things that are pushing to infinite bid. We are on the verge of an infinite bid on Bitcoin. If you look at the macro landscape, everything is set up to facilitate this infinite bid. And you have this coming from the big print. You have STRC from Strategy that is set up to basically buy forever and strip out the volatility and package Bitcoin into something that is palatable for people that want a steady income for retirement. You have nation states accumulating and more on the way. You have the potential for Bitcoin bonds also. That's another way for infinite bid to come. If you think about Bitcoin bonds, they're basically like a strategy vehicle, but at a sovereign level. And we at Jan3 were working on discussions with 2 countries. One is probably further along than the other, but still, once this happens, the snowball is just rolling down the hill and it accumulates. What else is infinite bid? Just pleb stacking. I think Matthew talked about that. Just Bitcoiners accumulating regardless of the market sentiment and quantum FUD or whatnot. People are just buying constantly. And then you have fiat collapse. And a lot of people don't understand how easy it is for fiat to collapse, but you just look in recent weeks of the Iranian currency, the rial, and it just went up and to the right, went to zero. It depends on which direction you're looking at it in. But fiat collapse is infinite bid. And for people that are holding it, there's just no Bitcoin price that is too high. You're trying to escape a collapsing fiat currency, you get on the nearest lifeboat, and that is another channel. Then you have the ETFs. And I think this is a big catalyst that has not been tapped into yet. We see a lot of inflows, more so than outflows, but the ETFs effectively remove the barrier to buying Bitcoin that has dampened a lot of prior bull runs where you're trying to onboard with an exchange and you're a retail guy and you have to KYC and you have to wait a week or 2 weeks to onboard. That usually kills it. And we heard the stories about exchange compliance teams getting backlogged for months. That's gone now with ETF. So I think that alone is infinite bid from the passive flows. But when the real flows come, that it is a big infinite bid. But overall, we are on the verge of all these things coming to fruition. And even if none of them happen and just one of them happens, that's enough. But we have 7, 8, 9 different things that are pushing to infinite bid. Well, I see adoption on the ground is always increasing, and we're trying to take advantage of that and get them into Bitcoin. A lot of the adoption in the market we're focused on, LATAM, is with stable coins like Tether, but Aqua offers both. So you get Tether and you get Bitcoin. So we're trying to get them into the Bitcoin ecosystem, and we're trying to do it naturally. So give them what they are looking for. They're looking for dollar exposure, and they get that in Aqua. And then you see Bitcoin very prominently, and it's very easy to swap to Bitcoin. But I would just want to address some of the things that Mechanic was talking about, people getting into gold, and it's almost an eternal September. So we've kind of lost our way as a civilization and relied heavily upon fiat and centralized banking systems to handle money for us. And now it seems people are suddenly interested in hard assets again, but it's almost like they need to relearn the challenges with gold. And I met a Bitcoiner last year. His journey actually came from gold. So he bought a lot of gold, and then he had a lot of problems selling the gold because, it's easy to get the gold. You can even buy it at Costco, but how do you get rid of the gold? And he found there was massive amounts of slippage. you can't ship it easily. A lot of shipping companies don't want to take your gold and ship it elsewhere. And to get out of that trade, if you're holding spot gold, is maybe 10-20% loss from what you're buying at. So maybe you bought gold, maybe it went up a lot and it's like $4,800 an ounce right now. But when you're selling it, you're going to take a haircut off of that because it is so difficult to deal with that. And people don't know. They're just buying it because it's always easy to buy something. It's hard to sell something. And Bitcoin kind of addresses that to almost a detriment for Bitcoin itself, so that a lot of hedge funds and trading firms, they're actually dumping on Bitcoin because it is so easy to sell Bitcoin ahead of market events like fear of war and like physical kinetic combat over Greenland, right? Even just a few days ago, right? Like today with Greenland, and then like 2 days ago with the Japanese bond yields going crazy and parabolic.
Oh,
right?
yeah.
So we are the easiest market that everyone can access to hedge or dump. And I don't think a lot of people understand that, but that is why Bitcoin is so amazing, because it is so 24/7, so liquid. The gold and precious metal markets, they're bifurcated. You have spot, which is easy to buy, almost impossible, if not, impossible to sell at market rates. And you have the paper metal markets, which are highly questionable. Like you don't know what they have in there. And they're easily manipulatable as well. So I think people just have to relearn that metals are not the answer. And they're going to find out the hard way. They're going to experience the manipulation, or they're going to experience the challenges when they try to sell. And eventually they'll figure out, well, Bitcoin is the better product for storing value.
Mow adds that ETFs have completely changed how retail investors access Bitcoin. In prior cycles, delays in exchanges, KYC, and onboarding killed rally momentum. Now, ETFs have removed that friction. Passive flows are already strong, but the real flows haven't started yet. He also highlights the shift toward hard assets after prolonged reliance on fiat and centralized banking. While gold is easy to buy, it is hard to sell without slippage. Bitcoin solves this with 24/7 liquidity, enabling instant in and out movement. That's why Bitcoin sees rapid dumps during panic, but it's also poised to absorb capital when investors realize gold's limitations. Meanwhile, Pal explains that Bitcoin correlates 97.5% with the Nasdaq and 90% with global liquidity, and that these correlations have held since Bitcoin's inception. For those correlations to break, something fundamental would have to change, and nothing has changed. Central banks are expanding their balance sheets again. Quantitative tightening is over. Fiscal stimulus is coming. The Fed is cutting rates and forcing liquidity into the system. Pal says the people calling for a 2026 bear market are basically saying that a correlation that has held for over a decade is suddenly going to disappear, and that makes no sense. He also addresses the frustration people feel when prices do not move immediately. Trump has been clearing regulations and laying the groundwork for crypto to explode, but markets have yet to respond. Pal says this is because liquidity has not fully flowed, and regulatory clarity has not been finalized. The Clarity Act is coming, and once it passes, institutions will launch everything they have been building. The banking system is revving its engines, waiting for the green light. When that happens, the floodgates open. Pal emphasizes that Ethereum is attracting massive total value locked across protocols like Aave, but the price has yet to reflect it. He says the market is in a phase where inventory has been built, but demand for block space has not fully arrived. Once the financial system starts running quadrillions in trades on Ethereum and its Layer 2s, the entire ecosystem becomes far more valuable. The use case is no longer theoretical. It is happening, and the banks are already committed. Now, here's the question. Do you think that Bitcoin and Ethereum will finally break the old cycles, or is this just another false start? Please drop your thoughts in the comments below. Thanks for watching. Don't forget to like and subscribe.